Welcome everybody. Great you could be here today to join us on this discussion. So laboratory space is always something that's an interesting talking point whenever we speak to anyone. Everybody's always got a story and opinion on it. So we thought we'd bring some people together and dig into that a little bit. People from both sides of the story, both from industry, laboratory users, but also people from the property market that leases out laboratory space as well. Generally considered, the situation is there isn't always the right type of space in the right locations available at the right time. So we wanted to just talk about that now. So I'll go through and I'll let the panel introduce themselves. I'll just give you a bit of background about them. So Andy.
Hi, thanks Neil. Hello to everyone. My name is Andy Palfreeman. I'm Associate Director of R&D Lab Core and Operations at Quell Therapeutics. We're a cell therapy company based in London, developing regulatory T-cell therapies to treat severe immune disorders. Our lead product is currently in the clinic, dosing patients currently, patients that have undergone liver transplant. And we have multiple programs in development that are very close to moving towards the clinic. Personally, I've been at Quell for 5.5 years, and I was present when we set up our labs at company launch. I've got a background in lab management with experience in lab fit-outs, lab relocations, as well as digital transformation projects. Before Quell, I worked in academia for about 14 years at Queen Mary University, Oxford, and Imperial College. So that's...
Okay, thanks. Jamie?
Hi everyone, I'm Jamie Bottomley. I'm the founder and director at Track Real Estate, which is a small niche property consultancy that focuses on the science and innovation space. So we help companies find lab space, we help the end users with their searches for space, and we also market space to let on behalf of landlords or occupiers with surplus space. We're based in Manchester and we primarily cover the Midlands and North, and recently celebrated our 4th birthday. So I'll hand over to the next person.
Okay, Karen?
Hi, I'm Karen Oliver. I work for a company called Touchlight. We are a synthetic DNA manufacturing company, although we also do R&D. So we have clients across, RNA world, all sort of disrupting plasmid technology. So we're a little bit different in the sense that we started in 2007, and I've been with the company 16 years, and we started as a very small company, spin-off, renting labs, and then we developed into, as you'll hear probably what I talk through, we've created a GMP facility in a Victorian Grade 2 listed building. So a little bit different. So I've got a slightly different perspective, maybe from some of the other people. And I've got a lot of knowledge from, so similar to Andy there, I've done a lot of lab relocations, a lot of lab moves, redevelopments, and I've been in the industry about 28 years now, a bit of R&D, Oxford University as well, and through to being in vaccine development. So a little bit about my background anyway.
Great, okay, and Matt?
Hi everyone, my name's Matt Lee. I'm the National Head of Science and Technology and a partner at Carter Jonas. So we're a national property consultancy similar to the work that Jamie does. I work with developers, universities, and companies, occupiers looking for space. So it's very much a sort of national remit for us. We've had a lot of history in sort of Oxford, Cambridge, and London. My background is working within the regions. I did about 13.5 years for a property developer, ended up as had a commercial in the science and technology portfolio, and I also did a couple of years in the NHS helping to sort of commercialise research and potential collaborations with the NHS. So looking forward to the discussion.
Great, thank you very much. Okay, so just to remind everybody here today, there is a box for questions. If you look at the top right, you'll see a little speech box with a question mark in it. If you do have any questions or comments that you want to make that you'd like us to look at, then please place them there. So I thought we'd get started, Andy. I mean, you mentioned about Quell moving into briefly mentioned Quell moving into a space that was kind of already dedicated laboratory space. So talk to us about that. What were the advantages of taking that, and what were the challenges as well?
Sure. So yeah, just to share with them, horrible echo there. So we'll try and persevere. There we go, it's gone. Yeah, so for those that don't know, and just to share, Quell's main facility and where all of our R&D work happens is on the White City campus in a building led by Imperial College, a building called Translation Innovation Hub. And we had the luxury of taking a floor that was already lab enabled. So we had, the main key infrastructure for our labs already catered for. So we had the air handling capacity that we needed for our CL2 labs already in place. We had lab supply and drainage of water all taken care of. And we had enough power requirements for everything that we needed. On top of that, we had a landlord who understands the nuances of being a lab. So they understand the type of work that we're trying to do. They understand all the health and safety aspects of our type of work. And actually it means that we can work really well together to make sure that everybody's happy with kind of our existence within their building, so to speak. They speak the same language. They understand our pressures. There's always a little bit of challenges, I would say. That might be the first challenge is probably the academic mindset compared to in the private sector mindset in terms of the cadence of your business. And just trying to understand that we kind of want everything done yesterday. And in fact, I can share that our fit out project, I think, took about 5 months in total. It's by far and away the quickest project that I'd ever experienced. So it's a really nice introduction to industry for me. But I think maybe one of the benefits of being on a campus like this is that we are within a cluster. So we're surrounded by other companies doing similar things to us. And from our work perspective, that there's loads of benefits to come about because of that. You're increasing your chances of serendipity massively just by being in close proximity to everybody. We're a pretty sizable company, so we try and be as self-sufficient as possible. But if you are a smaller startup, being in one of these clusters is extremely valuable. You get loads and loads of benefits from it. And I think what we're seeing a lot more these days is landlords appreciate the type of tenants that they've got within, say, life sciences and biotech, for example. So this campus, there's no end of events and lunch and learns and connections that landlords are actually trying to facilitate, because they don't really see this as a simple transactional, agreement anymore. It's not just a case of you turn up, you pay rent, and then everyone's happy. They really do see that they need all of their tenants to be successful. So they really try and they invest themselves in facilitating that ecosystem. So there's loads of benefits by being in that kind of cluster. I'm sure that we pay a premium for that. I'm sure if I compare what our rates are compared to someone who's kind of doing their own thing and carving their own path with their facilities, it'll be entirely different. How much and are those benefits of the right value? Is it at the right price? Not sure we'll ever know. It depends if you're successful or not, really. But yeah, so I think fitting out in a building that has the key infrastructure in place. It's a nice new building, so we've got all the simple things. The goods lift is massive. We've got great delivery access. I've got peers out there that are struggling to get gas cylinders up to their second floor on a regular basis. So there are some day-to-day logistics as well that you can really benefit from in a science-enabled building, if we call it that. But yeah, I realize I'm just waffling already, but that's kind of, it did make life quite easy, and I must admit, we didn't experience too many challenges in that process. It was a pretty easy path to fit out, to design. Fantastic construction and architects firms out there that are serving the life science industry. So it was a pretty easy way to build out our facilities and launch our company.
That's great. And you mentioned those external contractors or consultants. Were they something that you knew of yourself? Did you seek them yourself, or was that something that was kind of introduced to you by the facilities or the landlord?
A bit of both. So some of them were known to some of our lead investors. So it's not a secret. You can find this out anyway. One of our lead investors in our Series A funding was Syncona. And they are serial biotech builders. So they've got a pretty extensive black book of people that were offered to us, and then we could kind of choose to work with them or not. So we did get some recommendations. Likewise, there's a whole host of people in Imperial that I can call on and say, hey, do you know someone that can do X, Y, and Z? And since then, I attend the building meeting once a month with other kind of operations people. So people are constantly swapping contacts, passing on testimonials. So yeah, there's a really nice kind of network that people can kind of find the right resources and right support to work with and find the right partners.
Perfect. Great, that's really interesting. Thank you. I suppose on the flip side of that is a situation Touchlight, you Karen, where you've entered a building that wasn't a laboratory before, and it'd be interesting to understand kind of what the challenge is and how that's worked for you.
Sorry, just trying to deal with some technical issues there. Always my way.
All good.
Usually it's fine in a Victorian building, I promise. It's a kind of a long story. We started off as a very small spin-off in a rented laboratory that wasn't really kitted out for what we were doing, but we made it work, and it was fine because there was only a few of us, and we could, they had extra space, so we made it work. And then we had one of our chief investors back 2011 procured this site in Hampton, and it was supposed to be nothing related to Touchlight, but after maybe a few glasses of wine with our co-founder, which always the best decisions get made obviously after a few glasses of wine, they decided that maybe actually this building could be a hub of businesses. So similar to the sort of things we're talking about with science, but it was just, we were very small. There's only 6 of us. We only needed so many square meters. So for R&D, that wasn't such a big deal. I visited the site in 2012 and started talking with the architects. Obviously, it's a grade 2 listed building. There's an awful lot of, I know more about English heritage and building control and building regulations and bat surveys and insect surveys than anybody would ever care to know about in their whole life, unless obviously that's your speciality. Wasn't mine at the time, that's for sure. It's a bit of a difference from microbiology. So that's where we started, and it developed from there. And as we grew, Touchlight grew, we took up more space. So we were very lucky. We had a great architect on board who had an amazing vision. But as pretty much the opposite to being on a cluster, we had nobody to support us. It was a case of who knew who from which industry that could help us build. We were lucky. We had some very, very good advisors that came aboard for various reasons, friends of whoever, and we developed labs, and I developed a few labs before that, not to this scale, obviously. And gradually, as the years have gone, as we've expanded, we then realised that our future probably was in as a CDMO. Originally, it was just research. We could manage it in the different bits that we expanded into a little bit at a time, phase 1, 2, 3. And then about 4 years ago, probably just around about when COVID, we started realising we'd obviously gone into big partnerships with some of the bigger pharma companies for vaccine development. And it was a time that we had to make that decision whether we would try and build somewhere, whether we'd use somebody else as our CDMO and what we would do. And I went around, I mean, I literally spoke to I don't know how many different people in estates and all sorts of things to try and find the right facility for Touchlight to develop into. We're very niche as a concept anyway in the science side of things, so we didn't need the big scale with fermentation and stuff like that. So some of the big warehouse situations were just not cost effective for us anyway. So it was a case of, I mean, I looked in, and this is where I found the difficulty, and it's probably where I'm coming from, is finding a space that one wasn't too big or wasn't too empty, or companies that weren't interested in renting out to a pharma company or a biotech company, not knowing the longevity of it, the amount of money we'd have to spend on general logistics and getting gas and all those sort of, all the sort of things in place. The decision was made there was another part of the building we hadn't converted, and we did the cost of trying to find staff, because we'd have to relocate out of the area we are in, not in the centre, we're outside of London. Transport links are okay for the guys that live here, but if we moved everything, we'd have to look for new staff and set up everything again. So we managed to find a company. Well, we went through a few companies to try and find somebody who could make a GMP facility within a Victorian building without damaging the actual structure of the Victorian building, and understanding that we can't move steels that existed here for 200 years and those sort of things. So understand a company that could fit an air handling unit where nobody would want to ever put an air handling unit and those sort of things. So rolled on, unfortunately not 5 months later, about 2.5 years later, multi-million pounds, of course, and a lot more grey hairs for me and everybody else on the team. We have a very lovely award-winning GMP certificated facility now. So it's a long story, and yes, waffling a little bit, but trying to get there is trying to explain how difficult it is to do it within that building. Would I like to be on a cluster with lots of other support around us? Yes, probably, but we are where we are, and we bring really good scientists from all over the world here, and it is a most beautiful building to come into every day, and has very lovely new features inside the old ones. So that's my experience from here anyway.
No, that's great. Thank you very much. And you said that you'd thought about moving somewhere else. Was that still kind of the similar area, or were you thinking far afield?
So I looked, well, I say mostly south, obviously. I'm south of Birmingham way because of commuting. Cambridge would be ideal, obviously, in that sense, but it was too far for most of our staff. They're more London based. I looked a lot around Oxford area. And without going from ground up, which wasn't going to be right for the money we had and the investors we had, then it had to even though it probably would have been a lot, I say cheaper, and the worst words used, it would be cheaper to have been somewhere else. We would have lost a lot of our knowledge, which is the most important thing we have here. So, and to split people up, because we'd have to have R&D still here probably to be cost effective. Just didn't work. But yeah, south for us, just because of commutable distance for people.
Yeah. Okay. No, that makes perfect sense. I guess the availability of talent is always going to be a consideration when you do go further afield. If you know you're going to have to lose a few of your staff, you need the sense that you're going to be able to replace those. It makes perfect sense. No, thank you very much. That's two very interesting, very different stories. I appreciate that. And I thought what we'd do is look at it from the kind of property investment side now. So Jamie, I'd be interested to understand from your perspective, when property investors are looking at property, how do they view sort of lab space versus other commercial space like industrial or office space? What's their thinking like there?
Yeah, I think it's a specialist niche product is probably the short answer. I think if you look at levels of take-up transactional volume in the market, then for R&D labs, it's typically 5-10% of the equivalent office volume in a similar geography. The product, I think, as Andy probably alluded to when he was speaking, there's greater infrastructure requirements typically from the building. There's probably more operational considerations for what the companies are doing in the building as well, which adds complexity and cost. So for the generalist investor, that can take quite a lot to get over. You're asking them to pay more on a product that is focused on quite a small percentage of the overall market. But for the specialists who see real value in it, and are perhaps in it for the longer term, then I think it's quite attractive. I think it may only be 5% of the equivalent office market, but in certain areas, often next to universities, next to sort of knowledge hubs, maybe next to hospitals as well, then it might be 50% plus of the market activity in that area. So it's a niche sector that attracts specialists primarily. I think if for people who are looking to invest into it, I think for property investors out there who've already got space, then one of the areas we help companies with and work a lot on is, if you're a science business looking to take a lease on an office or warehouse that you're going to convert, then again, because of the complexity of the operations compared to sort of the other occupiers you may or may not be competing for that space, it can take a bit more translation around whether it's alterations to the structure of the building, putting in fume hoods, some of the substances or materials that might be used on the site, the delivery of larger bits of equipment, things like that can all be can at times be baffling to sort of the generalist property investor. So you're translating and looking to help those science businesses make sure they secure the space. And sometimes it just depends on the building and the situation. If you're up against a boring office occupier, they may be really boring, but if they've got a established business for 20 years versus a biotech with a cash runway of 2 years and it's a far more simple transaction to do, then you're fighting against that, and you've got to educate the commercial landlord as to the benefits of taking the science occupier.
I understand. I mean, what would be the advantages for a commercial landlord to go down that route, the science route, rather than let it go to the office space?
In part, it depends on who the landlord is, but I think science occupiers, if successful, are often more sticky to buildings if they've got MHRA accreditations, UCAS accreditations, things like that. If they've invested significantly in the building, far more than an office occupier might do, then they're less likely to move, simplistically. Whether it's the cost of reinvesting that infrastructure in another building, or whether it's the operational downtime of having to move your equipment and set it up somewhere else, revalidate it, it's far harder to move that than it is. It's a bit simplistic to say sort of a general office occupier can just shut the laptop on a Friday and turn up on a Monday, but it's that sort of mindset and that sort of consideration. So there's that aspect. And then there's altruistic aspects as well. Companies who are working in those spaces are doing things that are saving the planet or improving human health. So it depends on who the landlord is to a degree.
I think I'd agree with you as well, Jamie. You've said rightly there before about it being a sort of smaller market, but I think one point that you sort of touched on there, I think, which is really valid, is that if you're a developer, a landlord, and you create a space, even if the company goes, you're then you're in a different market, so you're diversifying the sort of occupiers that you're targeting, aren't you? And I know that's something that we've talked about quite a bit. If somebody leaves a space and it's fitted, and that then becomes an asset that you can potentially let to somebody else, as long as somebody's taking the right advice when they're fitting out.
Yeah. Okay. No, that's great. I think it's really interesting. I mean, there's a question that's come in asking about London, Cambridge, and Oxford potentially becoming oversubscribed in terms of the lab space that's offered. And I think It's made me think. Let's kind of think about this in terms of the broader UK. So Matt, I don't know if you can start on this, and Jamie, you might have something to say as well. But kind of what's the regional situation within life sciences space outside of the Golden Triangle throughout the rest of the UK? How's that sort of looking?
Yeah, well, I mean, I think, sort of starting on the Golden Triangle side, I mean, I think, the Golden Triangle effectively is Oxford, Cambridge, and London. There's, historically been Cambridge is the sort of longest established of those markets. Oxford and Cambridge have, the numbers 1 and 2 universities for sort of global research, particularly in terms of life science. Pretty much year on year, they might change places, but they're certainly right up there. And I think, globally, there's been that recognition of, Oxford, Cambridge, and London being the sort of capital city, that they're locations that people should be looking to when they're looking to come and take space from whether it's internationally or from within those sort of regions. But one thing that we've done a lot of work on, and we advise, a lot of developers and a lot of companies, and certainly, my experience, and I know Jamie will obviously be able to add to this as well. The regions have some real specialisms. There's a lot going on within the regional clusters in terms of some of them are world leading in particular fields of research. You've got collaborations between universities, hospital trusts, and developers. Some of the big clusters across the country. Manchester is a significant cluster. You've got a lot going on in terms of advanced materials and life science interaction between the hospital trust and the university over in Liverpool. You've got, again, world-leading material innovation, and things like the School of Tropical Medicine, vaccine research up in Leeds. Real strong sort of digital cluster. A lot of research going on as well in aging and robotics. I was in Newcastle yesterday. Again, they've got a really interesting sort of cluster of specialisms built around what's going on within the universities and within the hospitals, but also just the general natures. If you look at the profile across the country, you've got areas it's better to manufacture. You've got areas that have hotbeds of particular research. And I think one of the things that we spend a lot of time doing, and I know Jamie does this as well, is really sort of trying to highlight the value that is available within those regions, because the clusters there are really ready to sort of have those collaborations, and they're quite well set up as well for companies to come and work within them. There's a few regional developers, particularly some that have been there a long time and some growing portfolios, who are really unlocking the right space that companies need to come and meaningfully land. And so really, I think a big part of it is raising the awareness of what's going on within the regions outside of the Golden Triangle, whilst at the same time acknowledging that what goes on within the Golden Triangle is fantastic as well.
Yeah, understood. Let's add a question here. So, if a lab space is an issue in the Golden Triangle, how can landlords with available lab space in regions like the North East or Scotland market this effectively? Have you seen a way that's worked?
I think that's probably myself or Matt, isn't it?
Yeah.
I think it's probably on what Matt said. It's getting across that value proposition. So Matt talked about sort of some of the strengths of different parts of different regions have different strengths. So could be diagnostics, genomics. In Manchester, for example, home to the Christie as well, and CRUK, so a big sort of oncology strength there. It could be pharma manufacturing in Cheshire and Liverpool, or in Humber and up to the northeast, Wilton and places like that. Could be med devices, med tech in other parts of the country as well. But if the talent's there and there's the access to to universities and research, and actually some really pretty specialist facilities in some of those areas, particularly for startups. So if you've got the the attractiveness to draw them there, and it's often cheaper, then both of those together work together to create a better value proposition. I think you do come up against so there's natural gravitation towards the Golden Triangle, but I think it's about promoting the region stronger and perhaps drilling down into the strengths of the region rather than every region trying to be all things to all people, focusing on each region focusing on its strengths.
Yeah.
I think the work that you do, Jamie, and the work that we do in terms of helping people to promote spaces that they have within the regions, it's about helping them to come up with that message that attracts people based on those specialisms that you've described. But the way that you really promote something is to engage with someone like Jamie or myself who have that understanding of what really makes those regions tick, and if you're looking to attract people to a space within a region, then it's about talking to people who have the connections, the history, the understanding of how you build those propositions that attract companies. And I think that's something that we've both been doing for a long time.
Yes, it's just encouraging people to consider that value proposition. Give Matt or me a call, 10-20 minutes. We can at least talk through what's available, what the price is, what the strengths are, what strengths align to their needs in different cities in the regional market. Because if you're a biotech looking to extend your cash runway, property is typically the second largest cost for an organisation, so it's pretty significant. So if you're, like I say, either a biotech looking to extend your cash runway, or you're a contract research, contract-led organisation that's probably got quite a tight, keen eye on the bottom line and the margin you can make above that, then give the region some consideration.
Yeah. How key is availability of talent? Is that before the lab set up, or do you build the lab then attract the talent after? Have you seen how that works that kind of way, or is it both at the same time ideally?
I'm defer to Andy or Karen, but I think you need a core, don't you? I think to set it up, I suspect, but then you can attract and recruit and grow people with you in situ.
Yeah. Okay. No, good. Thank you very much for that. That's really good. I thought we'd kind of look a little bit kind of as companies grow. Andy, I'd be interested to hear what your thoughts are on this in terms of companies grow beyond the SME size from a facility like you're in currently and are looking for maybe more of a kind of big pharma space. How do you see that working in the current climate?
It's a big challenge, I think, and I don't think a lot of people have really taken on that challenge for a number of reasons. So, I mean, to start with, if you're looking for 100,000 square foot to take your company into, I don't know of many places that can probably accommodate that. I'm sure that a property developer would love to hear that and to take that phone call from you. But I don't think that there's many places, like iHub, for example, where we came and we took, I think we took 12,000 square foot initially, and we've kind of grown that to about 20,000 square foot. But we also appreciate that we are a well-funded company, and we've been growing at quite an aggressive rate in our 5 years. The classic path, I think, for most biotechs within the UK currently, whether we like it or not, is that you often end up being acquired by some sort of US or sometimes a Japanese entity. Arguably, basically, a big pharma comes along and makes an acquisition. There aren't a lot of sources of funding really at the minute that kind of really launches and propels a small, medium-sized biotech to becoming a large biotech within the UK. So to give you a bit of a reference, we're probably talking about your Modernas, your BioNTechs within the globally speaking. So they're not quite in the big pharma kind of pond yet, but they're definitely a lot larger than the average biotech. There is work going into changing that. So the current government currently has something called the Pension Schemes Bill, which is going through Parliament at the minute. It'll take a while. Things always do take a while to get through Parliament, right? But if it does, it could really unlock some significant funds that, if they get it right, if the political spiel, is to be believed, then it means that the pension funds are going to do well out of it, and it provides a source of funds for companies to really scale up and kind of avoid being acquired by the big fish in America. It is still slightly high risk. After all, they are taking pension money and investing it in high growth. That also normally comes with a bit more increased risk. But that could really be a game changer. And that's where we see a lot of companies that typically grow to, a headcount somewhere between 100, 200, maybe as high as 300 or 400 people in a company. You might see that company be able to scale up to 4,000 or 5,000 people within the company. That totally changes how biotech behaves within the UK. Not just in terms of property that we're talking about here, but in terms of, what does that do to a town, where you've got 3,000 or 4,000 people employed at a particular firm. You probably won't see all of that concentrated in one location. If you're that large, you probably will have manufacturing up near Alderley Park or something. You probably will have R&D and maybe in the Golden Triangle. You'll probably have some fancy head office on the banks of the Thames or something. I mean, it's up to each company. So yeah, there's some big challenges in terms of how that roadmap goes. But everybody here, we're all kind of part of this mission to try and make the UK. I mean, we're already very, very strong in science and technology, but this is probably how we really try and push the agenda to be a superpower globally, is to be able to have the full life cycle of companies, really. There is big pharma based in the UK, really strong presence from GSK, AstraZeneca, to UK flagged companies, but loads of other big pharma have facilities and operations in the UK because we've got such good talent and infrastructure. But yeah, that middle ground, that large biotech, is a little bit lacking. So yeah, I hope that Quell and Touchlight and everybody else, on the call, I hope that we're all part of that wave. But it's just where does the cash come from to really propel us?
Yeah, no, I think that's all really good. And like you say, it's an essential part of the pipeline to growing really big global successful companies that we really need to make sure that we've got that infrastructure facility in place to be able to do. That's great. So I thought we'd also have a look at the current economic conditions and wider climates at the moment, and that might impact investment, and see what we might expect really in the coming years from the availability of space. And I don't know if Matt or Jamie, you want to take that?
Yeah, I mean, I think you kind of wake up every day and you have a look and see what the current situation is, because it changes on a pretty regular basis. It's fair to say that we're living in a fairly reactionary time with geopolitics, global tensions. All have had their influences on interest rates, inflation, the sort of wars going on, and the various things that have changed in terms of supply pipelines. And I think what it all does, you've almost got this kind of you end up with this uncertainty as to how does this impact me? How much do Trump tariffs impact on me? Are they going to happen? When are they going to happen? The wars and the various supply pipelines that people have got internationally, disagreements between the US and China, or the flows of goods between the UK and the EU. I think there's just so much stuff that people try and get their head round, but ultimately I think we get to a point where we kind of live in a bit of uncertainty. What that does is, you talked before a little bit about funding. The headline last year, there was 8.1 billion, well, dollars is how it's measured, but $8.1 billion we tracked going into UK companies in the life science sector. Now that, as a headline, that's the second highest total to come into the UK in a single year. However, when you break that down and when you get into it, and I think, and it really kind of ties into what you were saying, post IPO equity and debt funding was about 57% of that. So there's a lot of money that's being raised, chunky amounts of money going into the sort of later stage companies, who have products, who have a track record, and therefore in a time where people are less certain, there may be easier as investment opportunities. I think more on the earlier stage, companies who are spinning out. They've raised, they've come out with some seed money. They're looking to grow a business and grow a team. I think it's much more difficult. So we're seeing companies stay in universities and spin out later because they want to be able to demonstrate the sort of viability of their product, which is when it becomes more marketable. We're seeing companies, much more aware of their cash run rate. Everyone's become far more aware of the impacts of, spikes in electricity costs when you're trying to run a lab facility, have a massive impact. So I think people are much more aware of their cash runway and how that can be impacted and how you have to have a little bit of resilience built in. And so I think, it does influence people's ability to be, I suppose, risk-taking, to be, their most sort of entrepreneurial when they have to have that sensible head thinking about, cash runways and how much space do we need? Is the time right now to grow our business? And so I think, all that going on has had an impact. But what I would say is, the fundamentals of the sectors, science and technology, life science, they haven't changed. There's a huge demand for innovation within the NHS and within global health economies in terms of, improving the time, speeding up diagnosis, earlier diagnosis, precision medicine, treating people well, cell and gene therapies, preventing people, certainly in this country, from coming back into hospitals where things get more expensive. Digital technologies, there's so much going on. And I think unlocking that earlier stage funding and the confidence that that will bring will lead to, another significant growth in terms of companies expanding, taking people on, and growing. So it essentially it all revolves around confidence. And I think, partly it's because there is a lot going on at the moment that we're aware of. And the other bit is it's much easier to access the information online as opposed to reading it in a newspaper or whatever it is. It's real-time information, and that sort of sensationalism certainly doesn't help. But I think it's just bringing back confidence, and then the sensationalist headlines will be about really positive things, and then everyone will be much less aware of things like their electricity bills.
Yeah. Okay, great. No, thank you very much. So I thought there's a couple of questions that have come through. Well, in fact, there's quite a few questions that have come through that I thought we could have a look at. One of them was with regards to using urban spaces, urban centres, rather than kind of more out of town locations. Do you feel that's a viable option for businesses in terms of finding facility?
I think it's urban locations are perceived generally, I think, for new sites to be perhaps more viable on the grounds that they are typically more accessible by public transport, typically next to universities, next to research hospitals or research institutes. So on those grounds, yes. That being said, there's science parks that are set up often sort of on ex-large pharma, ex-industrial sites across the country that have got some fantastic infrastructure. And in the regional market especially, I think the fact that a large corporate has put that investment in a way that might be more challenging from a viability perspective to do it today, means companies can benefit from it. So I think someone like Alderley Park, for example, the setup there for the smallest startups and for maybe perhaps sort of to some degree for chemistry businesses as well, but for the startups, the facilities I think are fantastic and probably hard to rival nationwide. The access to specialist equipment on a pay-per-use basis, you can anything from a single bench and got quite a sensible ladder of accommodation growing. I think that offer, when people inquire for a couple of benches or for small amounts of space, it's hard to match that anywhere.
Yeah,
and that wouldn't be there if the science park, if that science park wouldn't be there if AstraZeneca hadn't invested in it.
Agreed. So, I mean, just on that, a slight sort of sideways move, but in terms of the investment in property, how closely behind industry does property investment and property development follow? Is it proactive or is it more reactive? And if so, are we going to find that we're not in the right situation? Are we going to have a property boom in maybe when there's a drop in funding in investment in biotechs?
I think go on, Jamie. No, it's fine. You go.
You can take 3 years to develop a new building. By the time you've designed it, got planning, built it, you can easily be 3 years. And you look at that versus sort of the speed at which industry moves, then you need to build in as much flexibility as possible when you're designing those spaces. Because whether it's in 3 years when the building's delivered or whether it's 5 years after that, the building's got a lifespan of 60 years probably. It needs to be flexible to respond to change over its lifespan. You just need to build in as much flexibility as possible when you design the building, I think.
And is that typically needs driven? When that development and investment occurs, the need is there already.
I think you need to have you've got a far better chance of developing something new if you can evidence existing demand and a growth story beyond it. But if you're starting from scratch with nothing and you're asking developers to invest a lot of money into a growth, sort of a perceived sort of growth market that's hard to evidence, and I think it's far harder to do that.
Yeah,
there are some developers that see it, aren't there, Jamie? I mean, there are some who understand how that works, but absolutely right. I think one of the big questions we get asked is about take up in markets, and that's even for established markets that have had low availability. If you haven't had availability, then you can't really have had take up, and that is also a bit of an issue. But I think generally the property sector has to work on demand data, and if you're looking at demand data from sort of 2020, 2021, which has led to significant amounts of lab space coming forward, last year, this year, well, probably this year, next year, as a sort of reaction to that. Then if that gets taken up slightly slowly, then you might see some of the pipeline move out a bit further, and therefore you'll have a little bit of an up and down. I mean, it's what you see really is that you can only react to you can only really react to what you can see when it comes to development. So if you've got a slightly more sticky period in terms of demand, that will lead to a pipeline constriction in a point in the future, and then you'll say, right, that's what that was, and then there was a bit of a shortage, so more people brought stock forward. I mean, it's always been like that, and I think it's the same no matter what the sector. But I think the fundamentals of, particularly in the life science sector and the wider science and tech sectors, is that there's a lot of interest from the government globally in terms of investing in not just infrastructure but also in the companies and how we unlock the growth. And so I think the developers who have that confidence to bring stuff forward in areas where there is a shortage and that there's evidenced specialisms, will be ahead of the developers who wait to see what the take up of those schemes are. But it's an inevitability, really.
Yeah. No, I understand. Just one more question I spotted that came in earlier from Simon. It's smaller labs and startups. Are you aware of it, or have you considered the hub systems proposed by the likes of Thermo Fisher, where I guess you get a facility, but also you get supply, logistics, and things like that. So you're kind of getting the whole package. And whether you feel that might be interesting, and I'll put that to anyone on the panel that wants to talk about that.
Yeah, I can have a go at that. I think for the right company, probably the early stage startups, yeah, they're very interesting. I think the key really is whether those hubs, whether it's Thermo or anyone else. I know that there's a few property landlords that are doing similar things, and they're partnering with those scientific providers like Thermo Fisher and others to kind of bring in the equipment and the expertise. It's kind of, is it at the right flexibility and price point? And then the other key thing is, and this is a bit of a mindset that we take at Quell. If certain data points are incredibly valuable to us, we need to be in control of how we generate that data. So one of the risks of using hubs like that is that you have to relinquish a certain amount of control over that data. So someone else is managing that facility, someone else is maintaining that equipment, and you're probably going to be sharing that equipment with other companies and other users. So by taking that approach, you have to appreciate that you're running with slightly greater risk compared to whether you invest in those facilities and resources yourself. So there's a trade-off to be made. It probably works for people with tighter budgets and are kind of pre-seed, trying to get some key data together to kind of springboard things. And it's a bit of a needs must. I mean, there's still dozens, hundreds of companies that are operating out of academic labs in much sketchier situations, shall we say. And a lot of being in a startup is about your resourcefulness and is about being resilient and getting the job done despite these challenges. That's kind of what we do. We play with our backs up against the wall, and we normally come out winning. But I think there's definitely a place for it. I'd just love to see there be increased flexibility and really nice incentives for small companies to do that. There's big benefits for the Thermo Fishers as well, because if you get these companies locked into your workflows and your platforms, I mean, they know what they're doing. It is a long-term investment for them as well. So they can do a few loss leaders to get a good long-term return. But yeah, I think there's definitely a place. I'd like to see more of them, to be honest.
Yeah, it's definitely an interesting approach, I think.
I was just going to totally agree with Andy there. I think they have their place, but they're limited. They might be right for certain projects for a certain length of time that you have, or you know that you want to use a specific technology or anything like that, and you want to share equipment because you don't want the cost of maintaining your own systems and everything. And then you go on to, so that's the likes of the Thermo Fisher sort of side, and yes, you are maybe quite limited to what you utilize, products you use, raw materials, equipment you use, and then you've got the likes of, I don't know how you pronounce it, everybody says it's different, but Cadans who do it, but they don't run their, the warehouse, but they have facilities you can utilize together. They definitely have their place in the development of small companies and spin-off projects if you need to do them outside of your own business. And Touchlight have to do that sometimes for different projects. But I think Simon asked another question a little bit later about, it's great for the startups, but it's not so good for scaling up. How do you get out of those sort of little niche pods, if you like, little labs, which is great for all of us. I mean, if we'd had one of those, we were in a sort of research lab, and that worked for us as well, and we could use their stores. But the difficulty then is trying to leave that behind and then almost setting up on your own, trying to find somewhere else, either that has a bigger space or you have to go out on your own and try to find something that fits, that isn't too big, but gives you a long enough future proofing of things and stuff like that, which then goes on to the property stuff as well. So I think there's a bit of a gap there myself, but that's from what we found and many months of searching I was trying to do for Touchlight here, and have done in actually other parts of the world as well. So it's not just the UK that has that problem. We had the same in Spain and things like that. So, and we had to start from fresh there with a good landlord,
Yeah.
And that's difficult.
No, great. No, I understand. And Andy's point about we want to have availability of facility for the entire pipeline. If we're going to be a global superpower, we want to make sure that we keep businesses as they hit industrialization size. We don't want to be losing that business abroad. Absolutely. So I think there's a challenge in that for sure. So we're probably a couple of minutes away from the end. There's one more question come from Dave, which we'll take. So he said there's a lot of lab space coming online in London in the coming months, which I think we're all aware of. So are we going to see empty space in London, do we think, or how likely that is to be filled? And maybe Matt, you might have something to say on that.
Well, I mean, I think most buildings, when they come forward, have a portion of vacancy. They have a number of pre-lets and then have vacancy. I think it's part of the reaction to the market. You build up as many pre-lets as you can, and then you let the rest of the space over time. I think one of the things that that I would say is that there hasn't been a time to date where the supply coming in hasn't been eventually soaked up by the market. So I think we're at an interesting time where there's still a lot of interest in the sector. I think London has an awful lot to offer in terms of its connectivity, concentration of research, sort of global recognition. I think yes, there's quite a bit of space coming forward, but I think London as well as Oxford and Cambridge and Manchester and Liverpool, etc., the regions, I think that it allows companies to come and land meaningfully in this country in a way that perhaps they haven't been able to before. And so, there are opportunities for companies to come in, land, scale, do so at significant scale. So I think in time, as has always happened, this, the space will get soaked up. In a period of time where you've got more supply coming, it takes slightly longer for that supply to get soaked up. But history tells us that happens, and then you have a slight wait for then the next supply line to come as people react to the deals being done in those spaces.
Perfect. Great. Well, thank you very much. So that kind of takes us right up to the hour. So I will wrap things up from here just to say thank you very much to the panel for coming here and talking today. It's been really great listening to your stories and your insights, and thank you to everybody attending as well. We will have a video of this which we will be able to share with you. But that just remains me to wrap up. So thank you very much.
Thanks all.